So today we'll be continuing the series of what is the best asset class in commercial real estate in Tulsa to invest in. We'll be taking a look at retail in a post-pandemic world. Hi, my name is Darren. I own over 100 rental properties, and today we'll be diving into a report that showcases the retail investment in commercial real estate in Tulsa, Oklahoma. Just a disclaimer though, this report is slightly outdated. It showcases the second half of 2021, and we're now in the first half of 2022. But I think this will answer the question of what did retail do in the pandemic when the world was shut down? So let's jump into the numbers. As you can see, this report, like I mentioned before, was the second half of 2021. What's kind of crazy to me is this occupancy rate. 95.6%. That means the vacancy is only 4.4%, which is really low considering. One of the questions that we want to kind of answer is what actually happened during the pandemic and what did that do to the retail market? So as you can see in 2020, that's kind of where this big dip landed. We're closer to 94.5, maybe 94.4, whereas it increased in 2021 to now that we're at 95.6-ish. What's interesting is the years from 2017 to 2019, we had some pretty low absorption. So 2017 was negative, kind of evened out, but not that huge amount of growth until 2021, where we have a pretty decent amount of absorption. It seems like we bounced back. There was a little lull in 2016, 2017, and if you saw my previous video, that might be because of the economy of Tulsa. In 2016, there was a oil and gas. The price per barrel dropped, and so this might be the ramifications of that. But another thing to see is that on the 10-year scale, we saw in 2011, 2012, the lowest vacancy that it has been. And that's closer to what, 93 point something, shooting up to, where the records are kind of right now, very, very close. But yeah, that's very interesting. And if you're like me, you're kind of shocked. But for me, I want to know the asking rate, which dropped to $13.11, $13.11. And it was actually a little bit higher in the first half of 2021, and that was at $13.51. Let me fast forward to the actual asking rents by center type, triple net average. So as you can see, the figure 3. Power is incredibly kind of deceiving when it comes to the actual amount, because as you can see, this yellow trend, it actually boosts up the average triple net asking price, whereas for strip, neighborhood, and community, it's all below $20 per square foot, and then of course dropping down pretty heavily in these years. As you can see, depending on the asset class that you will be interested in looking at, a community, neighborhood, or strip, some of these triple net leases are, they're maybe closer to $10, with the baseline being $9. These are $9.50, maybe $10 over here, and then of course $15 for the strip centers over here. The next things that we'll be looking at are the next figures there. As you can see, they said it was $13.11 right here, and it dropped from $13.51. So as you can see, the fluctuation between this, we see an increase in the amount of asking price per rent. It seems like 2016 had a pretty big impact when the price per barrel of oil and gas dropped. And then we see a little bit of an increase, but that's kind of just even level, as you can see from these. Next thing is deliveries. This has been pretty low comparatively and extremely low 2020. As you can see, there was not a lot delivered, and same thing in 2021. Next thing is the retail investment sales volume. In 2018, it seemed like there was almost $200 million invested into this area, into Tulsa, and that's been averaging closer to about $50 million now, with a pretty big increase And it seems like people were still buying in 2020, seeing pretty good deals. In figure 7, we see the population and the household median income. So as you can see, it has been growing pretty large from 48,000 almost to 59, close to 59K. Inflation might be the cause of that. The population growth has been on a steady trajectory. And if you saw my other video, we actually passed the 1 million population mark in Tulsa, Oklahoma. As you can see, I'm kind of shocked too, and I'm sure you are too. The pandemic really didn't do that much when it came to the retail component of Tulsa, Oklahoma. Now, once again, I alluded to this multiple times. In 2016, there was a recession in Oklahoma, in Tulsa. And as you can see, that reflected pretty great when it comes to the actual retail numbers of Tulsa from 2017 on to now. Now we're seeing an upward trajectory after the bounce back, largely due in part what I would be assuming to the printing of money and trying to stimulate the economy. So projecting out forward, I think there's still pretty good deals to be had within whatever sector of retail that you want to be in. But I think the only thing that you would have to consider is what the interest rates are doing to consumer spending, plus then the actual interest rate of what you're buying when it comes to the actual loan that you get for retail. If you like these styles of report, I'm actually going to be doing these on all the asset classes in commercial real estate for Tulsa, Oklahoma. So be sure to subscribe. Also, if you would like access to my exclusive deals in industrial real estate, sign up for my newsletter on my website. Thank you.